Hey everyone, welcome back to Yuri's Box. In this video I'm going to be looking at TLT and the data we had for Tuesday, April 29th. If you like this kind of content, consider leaving a like and subscribing to the channel. And as usual, nothing in this video is financial advice. So TLT had well, you can't call it a bad day. It was a fairly nice green day. Again, it's nice to see TLT be in the green after, basically April. Really, the first 2 weeks of April were kind of gave everyone the illusion that it might be TLT's time to shine, but then, things didn't exactly work out that way. And today we really had a bit of, first part of the data that is due to come out this week. We had the JOLTs report, consumer confidence by the conference board, and another regional read by the Dallas Fed Services Index. So the best place to start is the JOLTs report. I was expecting basically the opposite. All right, I was expecting perhaps higher job openings and a lower quits rate. We actually got the opposite, right? We got lower openings and a higher quits rate. Best way to view it is, again, on the chart. I was expecting at best it to be flat, at worst to be around 1.9. I definitely wasn't expecting it to jump to 2.1. Again, this doesn't change my interpretation of how the U.S. economy is. Well, basically the U.S. economy's outlook. We are, relatively speaking, still at cycle lows, and therefore I still tend to extrapolate the same thing. I mean, U.S. consumer is less aggressive than it was in prior years. Therefore, wage growth is likely to remain sluggish at best, and therefore consumption will likely be sluggish. And in this sort of environment, any kind of inflationary bout will likely just lead to people just quitting, saying, I can't keep up with the price increase. And even if people were to stomach the price increase, they would just end up paying more money for the same amount of goods, leaving less discretionary spending available at the end of each month. But again, this is an ongoing story, and you know how I feel about it. We had, again, lower job openings. Again, this is kind of an iffy number. I mean, as far as I'm concerned, the job openings number, the best way you should look at it, honestly, is just to look at the direction, really. Are we on the uptrend? Again, similarly to the quits rate, are we on the uptrend, or are we going down? And again, whenever we had reads that were higher than expected, it usually gets used as a reason to tout the strength of the U.S. economy, which has been stronger than personally I was expecting. Back in 2022 and 2023. The backstory about that. But overall, the trend is quite clear on that front. And again, hiring rate stayed relatively flat. Layoffs were a little bit lower. But again, even when it comes down to layoffs, let me see if I can bring that up. Yeah, as you can see, I think even the consensus was for it to be actually a little bit higher, or actually possibly make a new high, and instead we got basically a 12% decrease compared to the last read. Now again, especially when it comes down to layoffs, I think it is very unwise to take comfort in the fact that layoffs are low, simply because by the time layoffs spike, whatever had to happen has already happened. All right, just look at 2008 when we had the peak in layoffs. That was the bottom for the recession, right? If you're waiting for layoffs to peak to call a recession, well, you're calling the bottom essentially. So I just wouldn't take too much comfort in the layoffs just yet. After that, we had a conference board, consumer confidence survey, and again, it was more of the same of what we saw in previous months. You continue to see confidence decline to levels not seen since the onset of the COVID pandemic. Decline was largely driven by consumers' expectations. Going down here, I think it is present situation. The present situations is sort of slight uptick compared to the month of March. Basically, present situation is still hanging in there. The labor market perceptions, however, definitely took a beating. As 31% of consumers said jobs were plentiful, down from 33.6. Same thing with hard to get jobs. People are saying it's harder to get a job. Again, 16.6 compared to 16.1. And again, really, I'll spare you the details this time. I won't really want much detail because it's really just more of the same, honestly. There isn't anything new. There hasn't been anything new from February onwards. And again, I think that is important to remember in the midst of all this tariff drama, because remember, we have been seeing this well before April 2nd, right? We started to get hints of it in February. We got more hints of it in March. Then tariffs probably, I'll leave out the probably, they exacerbated whatever was already ongoing. All right, I'll leave it at that. And again, we were down to 86. The previous read was 93.9. If I'm not mistaken, actually, just before I move on, the labor market conditions dropped substantially, which actually went down, yes, to 54.4, which is actually well below the threshold of 80. Again, 80 for the conference board is kind of like that line of the sand. Anything below suggests that there is a kerfuffle ahead, all right? And moving on quickly to the Dallas Fed. More of the same, okay? The revenue index of the Dallas Fed was fairly okay, nothing explosive, but again, it is consistent with my expectations of non-farm payrolls. I'm not expecting anything catastrophic. All right, I mean my personal forecast at 75K and 4.2, maybe 4.3 if we get some kind of shenanigans in the labor force participation rate, which actually, now that I think about it, could also bring us back to 4.1. But again, my base case is 4.2. If we get any shenanigans with the labor force participation rate, I expect something to come out of that. But again, going back to my forecast on non-farm payrolls, I think 75K is a reasonable forecast for the simple reason that we continue to see, as suggested by even all these surveys that we watch, the Beige Book, conditions generally aren't supportive for big increases in payrolls, but still things haven't really unraveled. So again, the way I put it is I'm expecting a meh report. All right, nothing, not great, not terrible, kind of like a Chernobyl situation. So, and really, if you read through the report, activity grew slightly in April, again, consistent with that. But on the other hand, if you look at labor component of that, it suggests maybe decline in employment in April and little change in work weeks. Perception of broader business conditions deteriorated further in April. Again, take a shot for every time I say business conditions deteriorated further in April, all right, throughout my videos. It's really more of the same of what we've been seeing from February. And again, it just serves to answer potentially for the time being at least. The question: are we in a situation that is more consistent with what we saw from September to January, or are we in a situation that is more consistent and akin to what we saw from really in the summer of 24, so from June to the mid part of September? So far, all of these regional surveys, consumer surveys, my opinion on those, but regardless, they all continue to point in the direction of summer of 24. Again, we'll see how things evolve from there. Overall, again, if you can look at the retail sales, retail sales activity increased slightly in April. Labor market indicator suggested falling employment. Again, this is it doesn't have to come out at 75k. Again, I'm just a schmuck with a YouTube channel. I don't work for Goldman Sachs yet. But again, I do believe that it's kind of consistent with this recurrent theme that we've looked at in all of these videos. That things kind of got worse in April, but we're still not at that decisive point of things unraveling. So things potentially could still be hanging in there. Therefore, my 75k print. I'm honestly curious to see how we come out on Friday. We'll get a bit of a hint of that tomorrow, actually, with ADP. Again, ADP is kind of a flaky number in and of itself. Try not to read too much into it because, again, there is usually little correlation between what you see in ADP and what you see in non-farm payrolls. However, it can maybe give you kind of an idea of where it will be, but again, try not to get too excited about ADP tomorrow. So again, all of this really just paved the way for TLT to move higher. All right, bad news means good news for bonds. And again, I'll reiterate that as far as I'm concerned, the way I'm treating the market right now is that we are back in a condition where bad news is bad news and good news is good news. Were we to have, blockbuster non-farm payrolls report on Friday, right, which is always a possibility given, the state of the labor market and, the fact that it actually surprises the upside many, many times throughout this cycle. Let's say it comes out again at 200k or 250 or 300k, right? Or even something that is somewhere between 150 and 200k. You don't have to go, bang busters on it. Let's just say, for the sake of the example, somewhere between 150 and 200k. That would be good news. That would be good news, great news for the economy, meaning that the starting point isn't as low as people think, potentially. Great. If we have something lower, right, even something that isn't that great or not that terrible, like 75k, would continue to point towards something negative, meaning bad news. So bad news is bad news, meaning that, again, if we have negative news, it's just going to continue to reiterate the fact that we're headed to iffy times. All right. And again, what I'll continue to reiterate as well while I'm at it is that I am sympathetic, and I've been sympathetic to the idea that, this move right here is kind of no man's land for bonds. All right. Because again, as I've been saying in the last few days, all of this move could easily be for nothing. If, we could easily be, again, 7:30 a.m. and May 2nd, 2025, we could be at exactly, or even here, where, let's go on the weekly actually. We could actually be here, all right, where the sell-off started. We could be at $92.13, 7 a.m., May 2nd. If we get a good number, well, I would expect some downward action because of it. And we could easily retrace, a big portion of this. Again, you could also see some kind of a news failure, and that would be an event, definitely. But again, I am in the camp that is that bad news is bad news and good news is good news. Therefore, if we have good news come out, expect that to negatively impact bonds. At the same time, we're not there yet, but let's just assume that, at 7 a.m., 7:30 a.m. on May 2nd, we're at, back here, back at the range low of the parallel channel at $85.70. Let's assume that non-farm payroll comes in weak. Well, all of that move will be irrelevant and will likely reverse from then on. So again, I would not get too excited just yet on what we're seeing right now. All right, it's good to see, however, that bonds are reacting as they should in the face of bad news, meaning we had JOLTs report, consumer confidence, yada yada yada. It came out bad. What would you expect bonds to do? Well, yields come lower. We got that. Hooray. That is definitely good news. However, as far as decision point is concerned, that is something that will be decided by Friday's non-farm payroll report. So again, we could easily be here on Friday. Let's say, what actually do we have tomorrow? Let's say that ADP comes in terrible tomorrow. Let's say, what else do we have? PCE is also supportive of, maybe we get absolutely unchanged. I'm just, throwing numbers here at this point. ISM is terrible. It comes in at 45. It's terrible, head for the hills. And that pushes TLT back up to $92 or even more. Then Friday comes around and non-farm payrolls comes in at 300K. All right. And again, it'll be all for nothing. All right. So I wouldn't get too excited just yet. We are in kind of an air pocket here. We're just waiting for Friday. That is my really what I'm trying to say. So keep an eye on the data. But eventually what will tell us, in the short term at least, where we're going, is non-farm payrolls on Friday. I guess I'll leave it at that. If you like this kind of content, consider leaving a like and subscribing to the channel, and I'll see you next time. Bye.